What is the market outlook for alternative investments, and where are some of the biggest growth opportunities? To find out, come join us in hearing from investment experts across the field, all the way from infrastructure to real estate, forestry, and beyond. Stay tuned. In this episode, we will find out what is the market outlook for infrastructure investments now and in the future. Together with me, I have Evli's own infrastructure expert, Richard Vanamo. Richard is portfolio manager of Evli's infrastructure funds and holds over 15 years of experience within the field. Warmly welcome, Richard.
Thank you, Petra.
So digging right into the topic of infrastructure investments, a very topical question is the current European energy crisis. So Richard, how do you see this affecting the infrastructure market?
Yeah, it's a very important question. And as you know, Europe is in an unfortunate situation now because we're short on energy and painfully dependent on energy imports. So what this means in the short term, we're going to have to find solutions for energy security, so just to keep the lights on. But then we also have the big question longer term of energy decarbonization.
Yeah.
And both of these are going to require massive investment. Lots of capital will be needed to solve these problems. And what it means for us as investors is that there's going to be actually an abundance of good investment opportunities.
Yeah. And talking about decarbonization, for many years now, renewable energy has been a hot topic. So how do you see these affected by the current situation?
By the current situation, I'd say, well, generally, whoever owns renewable assets in Europe right now is in a very fortunate situation. So with Russia squeezing gas, electricity prices being linked to gas prices and going through the roof. But then at the same time, the solar and wind resource, they're still free. So if you can produce electricity from those sources, you're in a very good position. You're making huge profits selling into the electricity market today. But however, each asset is different, and often you have locked in your prices. You're selling electricity on long-term contracts, at least part of it, and also you can't really make investment cases based on current electricity prices. We do believe that they're going to normalize over time. Mm-hmm. So a word of caution.
Yeah, very good. And in regards to excess profits, EU politicians have been threatening to impose windfall taxes to tap into these profits. So how do you see this political risk?
Yeah, it is a risk, obviously, but I'm not hugely worried since we're talking about taking away part of the excess profits. So that shouldn't harm your original investment case. You're still going to make a good return. And then if we look out in the longer term, we actually see quite benign signals from lawmakers, both in Europe but also in US, that there's going to be additional tariffs and incentives to attract new capital into renewable investments. And that should be really good for long-term investors.
Yeah, makes sense. So switching gears a little bit, could you tell us about infrastructure investments more broadly, and what is the outlook now with inflation and rising interest rates, for instance?
Yeah. So infrastructure is much more than just energy infrastructure. We have all kinds of different sectors. There's the more traditional utilities like water. We have transport infrastructure, very important, telecom and digital infra, and also social infrastructure. So there's really different drivers in all of these sectors. But what they have in common are some really interesting investment characteristics. So first, they're providing an essential service to society. They have very strong competitive barriers, and you have usually very, very stable and predictable cash flows, which are not going hand in hand with economic cycles. And in addition, these cash flows are very often inflation linked through contract or regulation. So those are all quite interesting characteristics in today's environment. and then combining them, they've led to infrastructure actually having very strong returns in the past, and also very low correlation with other asset classes. So that means by adding unlisted infrastructure to your portfolio, you're actually enhancing the risk return profile of that portfolio quite significantly.
Very good. And talking about these attractive characteristics, could you give us a concrete example of an investment case to make it a bit more concrete?
Yeah, sure. So we have about 90 companies in the infrastructure portfolio right now, but I'll pick one. It's a company called Vicinity Energy. It's a district heating provider, owner of networks in 10 different cities in the US. And here you see a live example of those infrastructure characteristics in practice. So first, an essential service, providing heating to hospitals, universities, other customers. They have very high barriers to entry since they own the pipes underneath downtown areas, very densely populated. It's not like anyone else would be able to replicate that network. They have very predictable cash flows, 10 plus year customer contracts, and in addition those contracts provide for inflation protection as well, because they can pass through fuel price inflation directly to their customers. Those are all the defensive characteristics, but in addition we have quite interesting upside potential here. So the company is working on densifying the network, so adding new customers along the lines, looking for new networks, either constructing or acquiring new networks, and in general just optimizing the performance of the network and enhancing the existing infrastructure.
Very good. And finally, talking about the sustainability angle, where do you see the main impact areas within infrastructure?
Yeah, first I want to say that responsible investment is very important in this area, since we're owning critical infrastructure that's essential to society, so it has to be owned and operated in a responsible way. But then looking at the different parts of ESG, I'd say environmental is very important. In some sectors of infrastructure, you just inherently you have a pretty high carbon footprint. But then you also have things like investing in renewable energy and the energy transition, which is clearly something we have to do from a sustainability perspective. But also aside from renewable energy, in other sectors as well, we're seeing a move towards more greener infrastructure, so new forms of mobility, for example. And the good news is that in unlisted infrastructure, the funds that we invest in, they typically take majority and control positions in the assets and companies that they own. So they're really in control, they're in the driver's seat and can drive this transition or the green sustainability journey of the underlying companies.
Yeah. And given the high potential to make an impact, how come there aren't more of these pure play impact funds within the area?
Well, to officially be an impact fund, so what they call an Article 9 fund, you really have to follow some very strict criteria, and that limits your investment universe. So you're restricted to investing in only certain niches of the whole universe. And you might actually be prohibited from investing in something that is currently maybe just traditional infra, less green, but you have the plan to take it to something more sustainable. So what we think is that you can actually have a lot of impact also investing outside of the Article 9 universe with a more diversified strategy like ours. So we do promote ESG factors. We work actively with our managers and our funds to do this. And one example is that there's a lot of work going into initiatives like greenhouse gas and emissions reporting across the portfolio, but also other ESG KPIs that enable us to really follow and see how these assets are improving over time.
Very good. So it sounds to me that even without being a pure impact fund, there's a lot of potential to make impact and focus on sustainability, for instance, through an active ESG approach that we have here at Evli. Very good, Richard. I think this is all for our part. Thank you so much for giving us a glimpse into the world of infrastructure. We will be back soon, next time talking about investing in private debt. So stay tuned. This is Evli.